Uh, Greetings, this is Rick Ackerman, editor and publisher of Rick's Picks, and tonight we are having a request session. These are very popular with my subscribers. I do them on a somewhat regular basis, and the idea is that you come here with wanting a good technical analysis for certain stocks that you track. In many cases, there'll be stocks that don't get much coverage, but here we cover pretty much everything, anything on demand. So it's a good time to take a look at stocks that you don't hear too much about. I love the obscurities. A lot of times people come in these sessions and the stock of the day, whatever interests them, turns out to be some stock that has gone up 87% in the blink of an eye. And of course, there are ways to get a handle on those stocks. And if you use any disciplined system, such as my method, the hidden pivot system, you shouldn't get anxious about those wild moves. The moves are always relative to something that you can measure, so you're never completely lost as to what's going on. So I do have just one request here for LMT. This is from a subscriber, and I'm going to take a look at that. But I'm going to just mention to those of you who are in here now that Rick's Picks is not make-believe and coulda, woulda, shoulda trades. We actually do real trades. I put them out in the chat room, and we've got one that triggered tonight, a short in the E-mini S&Ps at 2994. We'll probably, typically we cover the whole position at the red line, but in this case, I would say cover at least half. And by the time you get to that point, you're going to have a nice profit, and you'll find it easier to manage the risk of the trade. Before I get into the requests, I'm also going to mention this isn't a hidden pivot secret. It's not a real trick per se, but the best way I've found to manage the risk of a trade is to take a partial profit early on in the trade. And it doesn't have to be a big partial profit. Any profit will do. And you'll discover that when you've taken a little bit of the house's money off the table, it puts your mind in that relaxed space where you just have a way, an instinctual way of making the right decisions as you take more profits and so on and so forth. So again, very simple trick. Just take a small profit, a partial profit early on in the trade, and it will enhance your judgment enormously. It'll just put you in that relaxed space. All right, so let's get into actual analysis. I've got a request I see for LMT, Lockheed Martin, and I always want to take a look at the big picture just so that I know what's really going on. We've got something pretty obvious going on in Lockheed right now. It's something. Let's see. We may be a step behind the music, but let's see. We've got where to go. All right, very distinctive stick up high point A there, and all right. So Lockheed shows it's got a very nicely defined pattern, and this one's it's actually kind of nasty though because of the way the stock broke down through that red line. That's called a midpoint pivot, and you'll see that there's an enormous amount of information to be gleaned from price action at that midpoint pivot. In this case, we had a decisive penetration of it on, I'm assuming, earnings news. And I would say it's decisive enough that this stock is eventually going to make its way down to 354.77. And I'm assuming this is a good bar. It looks kind of wacky, so I can't say for sure, and I need to double check this, but just on the evidence here with the impalement of that red line, the midpoint hidden pivot support, I think it's going to go all the way down to 354. And if it hadn't breached it, so if it had come down slowly to that red line, I would probably have told you to go bottom fishing there with a really tight stop loss. And by really tight, I mean the tightest stop loss you've ever seen or heard of. We'd put it maybe 15 cents below that red line, in part because of certain characteristics of this A, B, C, D pattern. And if you want to know more the details of the hidden pivot method, I'm going to show you at the end of the presentation how you can get all of the information you need. All right, so let me move on from Lockheed, and the next request here is CMG Chipotle, which had its problems for a while. They had a little bit of a norovirus problem that affected the stock for a couple of years, really. Let's take a look at the very long-term chart, and we had, let's see, from August of 2015 till February of 2016. So it had a rough patch there, and I guess they've got things under control, other than the price of that one scoop of guacamole that they charge. I think it's $2.05 for now here in sunny Florida. All right, so let's take a look at the really big chart, because I found that one just a little hard to read. But here, even without my telling you how hidden pivots work and how these ABC patterns work, we've got one so obvious that a novice could have found it. And what I just said a moment ago about the price action at P being a cornucopia of information, it's happened here. We've had this rally impale this red line, the midpoint hidden pivot resistance, with such ferocity that in my mind, there's absolutely no doubt that the stock will get to 969.27. So this stock would, there are two ways to buy it. There are a lot of ways to buy it, but a couple that we use with the hidden pivot method involve a pullback to this pink line, what I call the secondary pivot. And there are certain rules. It's called a mechanical trade, and certain rules apply, but the stop loss would be equal to 1/3 of the differential between this pink line and that. More safely, you could buy the red line, and even though we're not likely to see a pullback all the way to the green line, that would still be a buy in my assessment. In other words, the stock could fall 400 points, and I'd say jump on it here. So, but more immediately, there are a lot of ways to skin the cat here, but I think it's going to 969.27, and I say that with a pretty high degree of confidence based on the way this thing shredded the red line, the midpoint resistance. Request for Amazon, and what a killer. I'll mention that we have Wednesday tutorial sessions that are effectively a graduate studies course for people who take my hidden pivot webinar, and we trade Amazon using that idea that I just showed you. It's called the mechanical trade, but we don't do it on the monthly chart where the patterns are very big and they have commensurately large stops. We trade it mainly on the 1-minute bar chart, where we can cut the risk of entry. Even in a $1,700 stock, we can get it down to literal pennies per share, if you can believe that. All right, so this is a monster. I guess I'm not going to give you the pie in the sky. It's not pie in the sky. This is a realistic target based on this pattern. It's just that I can't believe it. I do, because I trust my technical methods before my instincts. But this is more bull market than that I want to acknowledge at this point. I'm tracking Apple in that way too. I've had a target out in Apple at 243 point, I think it was 68, and the idea was that the bull market wasn't going to die until Apple at least got to that target. But we have to be prepared for Apple to blow through it. Apple is the biggest company in the world by capitalization. And so you can assume that if it's going higher, we're not going into a broad bear market here. All right, so this chart gives that target $1,100 and way above where we are here. So I would kind of zoom down to the weekly here to get something a little more meaningful, something we can use right now to actually trade this little son of a bitch. And let's see. All right, let's get rid of this ABC pattern that was appropriate to the monthly chart and see what else we can do. I'm always looking for something called impulse legs, and the most distinctive one, this is pretty gnarly. I would call this advanced hidden pivotry. It just about hit the target off that pattern. We're going to zero in on an even smaller chart to get again, we want to find something that's tradable. Stock is, you can see, it is currently trading exactly where it was in October of 2018. So even with the big move down and the big rally, it's net going nowhere in a year. So it's the pattern that I would use to trade this. There are a couple ways. I'll show you a way to get in really right now, here and now. But if I wanted a big trade for a big move up toward 2000 and above, I would wait for it to break down beneath that low. I can't say that that's going to happen, but if it does, I think it would provide a pretty good buying opportunity, even if it's not the beginning of, or let's say, a restart of the bull market in Amazon. So, all right. So even now, we need something a little smaller to get ourselves a good trade. And I want to leave you with something you can do here because you did ask. Very good bullish that this high exceeded this high here, what I call an external high. So you're trading to get a handle on the trade. We're here on the hourly chart and looking at this pattern, and it stopped where we've been talking about where it should stop at that P midpoint pivot, the red line. So that tends to confirm the pattern. It means that if this thing busts through the red line, not only is it likely going to 1826, but when it gets up there, you can go short there because you're going to get a very precise reversal from that level. But I have to say, even as much as I can say, as I've just said about it, it's pretty tricky on a short term. If we see great trades on the lesser charts that are not corroborated by entry signals, buy signals on bigger charts, then we know we're somewhat hallucinating. So there's a lot of uncertainty here in Amazon, but it is bullish. And if and when it gets past 1787, I'd give you an easy 50-point romp there to 1826 is extremely likely. All right, so during these Wednesday tutorial sessions, we sometimes do the gun to my head trade, where I'm just I'm under the gun, under the gun, and the idea is we can we can force a trade in any situation, and that has to do with the nature of the hidden pivot method. We're simply looking for ABCD trends going one way or the other, and if you were to say, well, Rick, get long here, how do you do it? I would go to a chart which shows me an uptrend, which is right here, the 1 minute. And I don't have quite the goodies that I need to make a trade out of this on the 1 minute, but we'll drop down even more to the 30-second chart. And now, just with this little nubbin that I've created here, I've got something I can trade. And you can see how we can cut the risk in trading Amazon down to size. All right, so it's already, well, let's see. It's already stopped out this signal here. And I'm going to show you how we would do it, but I don't want to get on this for too long, but you can double check me after this session to see whether the trade worked. But I would use the following pattern on the 30-second bar chart to get the job done. Well, maybe I want to be on the 15-second. And you can imagine that the smaller the chart we use, the lower the entry risk. Let's see, how do we do this? All right, the stock is diabolical. Well, I need to, all right, well, the trade already triggered. And it was this, the trade was getting long on a buy stop limit at 1765.26. We're only shooting for at least to get in for 27 cents here. We make $100 on a four round lots, but we'd be in the trade and we could have taken a more substantial profit up there. But again, this is how you cut a stock down to size, even a $1,700 stock if you want to trade it. Let's take a look at gold from Facebook. I don't know. Let's see, this gold, the ETF gold, and we'll take a step back. Gold looks pretty good to me lately. Or not, I mean, it looks good overall, certainly since June, but we've been in a real dirge lately. And I'll tell you what, I'm going to get rid of some of these old lines so that I can see things more clearly. And again, if you're interested in the nitty gritty of the hidden pivot method, stick around. I'll give you a couple places you can go. For one is for a demonstration and an explanation of some of these things, these tactics that I'm using, and the other is just a great deal to learn everything you need to know about the hidden pivot method. All right, so I'm looking for impulse legs, and the last low that was exceeded was right here. So the critical price, the ABC pattern that's going to tell me everything I need to know is right here. And I don't know that it was this clear on the futures contract, but this was a perfect textbook mechanical short at 1811. So we're a little bit late to the party there, and I can't remember what I was putting out in gold futures, but I've got a lot of subscribers who are really keen on gold. I'm less keen. I like gold. I'm bullish on it long term. I've got a Krugerrand sitting right here on my desk to remind me what gold is and how beautiful it is. But I'm capable of saying, hey, it's time to get short here. So the short was 1811, and the way it took a while for this thing to break decisively below the red line. So that means that it's not necessarily ordained that this downtrend, this correction, is going to get to 1589. My gut feeling is that it will, though, and that's why I'm not so eager to buy gold, but it will be a buy. And even if it were to come down here to penetrate this low, it wouldn't do irreparable technical damage to this daily chart. Request for MJ and alternative harvest. Boy, this stock's been having its troubles. Well, let's take a look at the weekly chart. Sometimes we zoom out to get more clarity, and here we've got it. All right, I can see kind of what's going on here. I rarely use the marquee high, this highest high on the chart, to begin an A of an ABCD pattern. And if you'd been here a week ago, I could have gotten you in at a good price there. This is a lovely pattern for proprietary reasons. You'll have to take the course to find out, but I would have told you to be in there bidding at 1797, maybe a little bit above it. The actual low was a dime from our target. So let's just say it turned at the right price. And there are 3, 4, 5 ways we could have gotten in there with the stop loss of pennies, but we're a little late to the party, I'm sorry to say, but let's take a look and see if I can get you in on the daily chart. Is certainly inconclusive here. It hasn't exactly said, let's just run with this, baby. We're in Fat City, not quite. Let's take a look. I'm going to drop down even more on the 60. we'll come down to the 30. And the 30 is where we start seeing things we can trade. Here we've got an impulse leg, a rally that got past, well, only one peak there and one there. So it's a good rally, and we had a good entry point, which, as it so often happens, is in a place where we never could have done the trade. The entry would have come at 1960, right in this gap, so we would have been shut out. I could have told you where to get in. Actually, let me see. There's a little bit. I made a mistake there with my C, but all right. So our entry price, as sometimes occurs, more than I would like to see. We had a gap, but another thing is that the initial push through the red line, that midpoint resistance, was so decisive that no matter come hell or water, and this is certainly hell, when we went from there all the way to the green line, we would have bought there mechanically at the green line. This is where we would have gotten long the stock. We would have sweated bullets down here, but if we simply use the mechanical trade according to its natural advantage, which is just do it. Don't think about it. Just work the trade mechanically using these levels. We would have said, screw it. If we lose, we're going to win more often, and so no big deal. This is the mechanical entry is a great way to get into a trade if you're tired of second guessing yourself and getting stopped out of trades just because they scared the hell out of you. A request for Bitcoin. Well, let's see. I don't typically use this symbol, but we will this time. I use BRTI, which is a kind of composite of best bids and offers across the Bitcoin world. And here it's pretty close. My BRTI is trading 8013, and this is 25 points higher. But let's take a look and see. I do have a, in my symbol, BRTI, I do have a mechanical buy that's been out there for maybe a couple months in Bitcoin. I'll show it to you. Let's see here. Well, that sucks. I'll show you the chart on my home page. All right, so here's the weekly chart, and it was a mechanical buy on a pullback to 76.09. It got within a hair of that and didn't quite get it, so I can't consider the trade filled. But on your chart, on your symbol, let me see, we were on a weekly chart, and the buy, the point A low, kind of a mini low, was on July of 2017. So to consider your symbol, what was it again? It was, let's see, July 17th. All right, so it's BT. All right, so July, what did I say, 2017? Oh, I don't even know. Okay, well, let me see if what I can get you based on this chart. All right, so it would trigger a buy at the green line, and I say a theoretical buy. I wouldn't jump right in, and you know you're going to have yourself $10,000, $12,000 worth of risk on that trade, or 11,000 and some. So it looks good, but obviously this thing has had quite a savage correction, and all I can say is that we have ways of getting in, doing no harm to ourselves, but you'll need to you may need to sign up, take a free 2-week trial to Rick's Picks, and pursue this further, because I don't want to get into the nuances of Bitcoin. Just that, yes, because this big impulse leg got past a bunch of external peaks, it looks good, but we want to make sure, and when we trade it, we don't want to get nailed because we're overconfident. Sony, Well, sometimes what you need to like about Sony is this run up here had a couple of choices. It could look to the left and see that resistance peak right there, what I call structural resistance, and chicken out, or it could say screw you and just make a high slightly above it. So it did that, and that means that buyers have some real gumption here. So I think the monthly chart looks pretty good. I have trouble picking out a good pattern because I don't see a point A low that is commensurate with this big B, C pullback right there. But I would say the chart is good enough for government work, and I would give you a minimum projection to 66.68 on this stock. It may be a little bit of a struggle because, as you can see, the stock did not exactly pulverize this midpoint resistance the first time it hit it. It took a little while to get through it. It did. And again, I think very good odds here that we'll see 66.68 on this stock. Request for MCD, McDonald's. McDonald's is, I'm sure, thrilled to hear that who is it? Wendy's. Everybody's jumping into the breakfast game now, and anyway, McDonald's. I guess they must be doing something right. Let's see what we got here. This is a good sign when you get a target as clear as this one is at 215.21 and McDonald's makes some headway above it. That's bullish. It should have stopped almost exactly at that target. So in order to get you a new target, what I'll do is slide down to a lower A, and I think we're looking at 238.04. You know, it's hard for me. You guys are throwing me all these stocks that look so good. I'm a perma bear. I'm not really. It's hard for me to buy this, especially with China and Europe slipping into an abyss economic hole, and U.S. housing and autos have peaked, and consumer spending is falling off, and all that. But I look at this stock, and I would say pretty good odds of getting to 238.04. How do you buy it? I would suggest a mechanical bid. If you take you simply bid at the red line, which is at 192.44, and your stop loss would be a third of the differential between where you're getting in and our target, 238.04. So that means 46 points. Your stop loss is going to be about $1,500 per round lot, not exactly chump change. So typically we would use another method, something I call camouflage, to get in with a much smaller stop. But if you just want to observe and take my suggestion for what it's worth to you, watch what happens. I think that it will come down to 192.44, and that ultimately 192.44 will have been a good place to get in for a ride up to 238.04. Don't expect this thing to come down to the red line and reverse. It could come all the way down and maybe flirt with your stop loss within pennies, but because again this is a mechanical trade, we don't want to second guess ourselves, just kind of stick with it. This is a request I had by email, and I just want to take a look, CVS, and it's in a never-ending downtrend here. There are ways to trade it. It's bullish, but who knows how much ratcheting lower it's going to do. We do. I mean, I can show you, if you give me another 6 or 7 minutes on this chart, exactly how we don't have to be fooled. And one claim I would make for the hidden pivot method is that if you're on charts of lesser degree, you'll never ever make an error as far as predicting the trend, forecasting the trend, and the trend strength. The idea is, to put it another way, that if you're on the 1 minute chart, you're going to see the very first tick of a bear market. Every bear market begins a single tick off some all-time high. So So in that same way, if we stay focused on the lesser charts, we see the trend in its smallest aspects, and we're never behind it by at all. All right, so let me see what else there is. Has CVS made a decent bottom there? Well, one way I would determine that is to take this little pattern here, and I would say maybe. How's that for your guru speaks? Very decisive there. This is an odd place for a reversal to occur. It's certainly one that we don't trade aggressively, so I don't know. We come down to the weekly chart to get a different kind of picture, and whatever's happened in 2019 hasn't been enough to generate a bullish impulse leg on the weekly chart. That'll take a push above that line right there, and until it gets above that line, just color me skeptical. On the daily chart, we might be seeing some bullish impulse legs, but even there, not really, because the only external peak on this big decline we had last February, March, it didn't leave any footholds for taking what's happening on the right-hand side and making good sense of it. So the only thing I could do, we could trade the hell out of this stock and probably make money on it every day. But because of the lack of external peaks along that steep wall, I'm not gonna be too aggressive about saying, hey, for sure it's going here or going there. Let's see, we've got a request for XAU, which actually I think takes a $sign on my. And I can't say much more about this than I did about GOLD. It looks pretty bullish. We had quite an impulse leg that occurred from late May up to the high there in August, late August. So we're correcting that, and we can get a very finely nuanced idea about how much correcting we're going to do. And I wind up drawing the same pattern that I did in GOLD to get a good handle on this stock. And we could look for a breakout on the hourly chart or whatever, so that I'm going to tell you to wait for 85.08 here. I think it's going to go there, maybe even a little bit lower, and there'll be a few good ways to trade it when it gets down there. But as you must recognize, there is that risk here that that it won't get down there, that we'll miss the turn and we'll miss a fabulous rally. But as I'm trying to tell you, we don't ever have to miss anything if we get focused on the lesser charts. We'll never miss a significant turn as long as we're here. So we could take a speculative long position that is based on the premise that that chart that I just showed you is going to go bananas, and we'll get to the D target in next year sometime. And we can get in here just speculatively and think we may have made a bottom last week, and now we're finally on a way up again. So we can do that. But I think I'd take the big picture. I'd take that chart that I just showed you and kind of use that to determine where this thing may be going. A lot of bullion fans in here today. And I'm not going to be able to say much about silver. Let's see. Well, let's see. I was going to say, all right, the pattern that I would use to find opportunities in SLV, an ETF vehicle for trading silver, is right here. And let's just make sure we get the right A's, B's, and C's, because we don't want to risk even a penny that we don't have to. All right, so this stock has been screwing the pooch relentlessly. And I would say back up the truck or buy aggressively if it comes down to 1857. but it shows such reluctance to do that. I mean, even though we've got this nice AB impulse leg, then a high, it should have just been able to come down and get it over with, but it hasn't. There's a lot of bullish support here and some short covering by bears. So that's why you have this really nervous action here that hasn't signaled much of anything. It has signaled a short at the green line for a trip down to at least 1587, but I'm just unexcited by that. I think there are better trades, more trades that I would have more confidence in. So if it goes through, if it doesn't even get down to the red line and it pops up through that blue line, we would shift our perspective to this larger pattern right here. With the target at 1920. So that's a pretty good move from here. 18%. So let me see. All right, so it could go either way, but if it breaks out, also one other thing to keep in mind is that this red line, the midpoint resistance, is probably more of an obstacle than these peaks right here. But if it gets through that 1752 decisively, meaning up here 1780 something, or if it closes for 2 days above 17.52, that is a green light. That is hawk, granny's jewels, sell the ranch, just raise money to buy this thing for a ride to 19.20. Let's see, let's take a look at Snap, another request. And again, if you're interested in finding out everything you ever wanted to know about the hidden pivot method, stick around. I'll give you a couple of URLs, one for a demo that goes into some of the entry tactics that we use. There are 6 of them, but we've been focused just on one. I call it a reverse or an RABC trade. And to say that subscribers have been knocking them dead would be understating. It's been a great winner for anyone who was troubled themselves to learn this particular entry technique. All right, so Snap. All right, well, the trade we would be doing if I were trying to set this little curmudgeon up for a long entry, I'd do it like this. All right, so we made money the first time this thing signaled. We were in at 1435, we were out at 1501. That's not much. It's $260 for 4-round lots. We took the position off there, and we've had another trigger. Usually the second time, the interesting thing about this RABC trade is when you get stopped out the first time, sometimes for a profit, sometimes for a loss, it works better the second time. So we want to pick ourselves up and do it all over again as soon as we lose money. All right, so same thing. We made the same $66 here on an easy trade, and but since the second time is the charm, and one other thing, we've got a pullback from what I would call the sweet spot. I won't get into that too much. That's one of the proprietary secrets you'll have to pay for. But this thing has triggered a mechanical buy at 1411. So you can track me on that. Come back in a week or send me an email, because what I would do here would be to buy 1411, stop 1340. It looks like 1341 stop loss, and you're shooting for 14.75 on half of your position, and I think you could hold the rest for a shot at 1608. Disney ain't so hot. I've been seeing a comparison between Disney and the tech stocks, and I don't know. Disney, they're the worst hacks ever to ruin the film business. Every film they make seems like it was plotted by a committee, or worse yet, by an algorithm. So Disney is creativity by algorithm. All right. So I guess the world's pretty excited here about Disney jumping in with a half price relative to Netflix, half price streaming offer, like the Disney library of recycled Marvel comic film. I'm not, don't get me started. You can tell I hate Disney. But all right, as far as Disney, the stock, Disney, the thing that moves around on a chart, which is pretty much what we care about. Let's see what happened here. Well, this reversed at the pink line. We call that Matt's curse. And Matt is a kind of a silver trader from my subscriber ranks, and he's come up with a rule that if we get a trend reversal from very close to that, what I call secondary pivot, it usually goes on to stop out the C of the downtrend here. So that is as much as saying that the stock is going to 140 and change. So that's where I think it's going. UUP, what is that? And though you've probably seen technical analysis in other forms of it, but this is definitely this is a little bit different. It's really the work of an English major, me, and so it's primarily visual, a lot of pattern recognition, very little math, and it has its idiosyncrasies. But I like to think that it's probably the easiest technical system you'll ever learn that really works. So here in Invesco US dollar bull, whatever it is, a lot of these ETFs are created, as you know, just to sell options against them, especially the ones that are 3x, 4x, whatever they're doing. All right, let me try this again. I just had the most delightful customer service response from I get sometimes I have a gripe about TradeStation's shortcomings, but one of them is not customer service. I just had a really nice letter from Pedro San Juan, the customer service manager, and I was concerned because it takes forever to get your tech support answered. And also, I asked them what are they going to do about Charles Schwab and no commissions. So TradeStation will have a no commission model coming. They had foreseen Schwab's move. And as far as the support, it takes so long to get TradeStation because their platform has a lot of functionality, a lot of bells and whistles. It's very complex, so that their tech calls are much longer than the ones that let's say Ameritrade, Thinkorswim, the ones that they handle. All right, so we've had a nice buy signal there at the green line, and it took a day to get out of half of the position at the red, and I would give you immediate target there of 26.72. I think it's going to get there. If it gets up a little higher, let's say to 26.66 and pulls back to that green line, you could buy there with the stop loss at 26.53 for a ride to at least 26.72. Of course, we're not really trying to make our fortune on these teeny tiny trades. What we're looking for is to establish an almost no risk position to get into the trade that has potential to go a lot higher, but to do so risking almost nothing. We've got a request for dust. All right, well, if you've been around in early September, I would have said I love the stock at 557, and you could have bought it at a dime above that. So the stock is kind of doing what we would have expected it to do. And some of you may, who've been sort of hanging on every word that I've said, will recognize that this breach of the red line, the midpoint hidden pivot resist support, gave us a really good confident call on a further downtrend all the way to 557. So we would not have been buyers in this stock from about last July, from July on, but we certainly would have been buyers down there. As far as what's happened since, the pattern that I think has the most usefulness is right here. This low, I yipped my low right there. Let me get it on the correct low. All right, so it was a mechanical buy there at the green line. We're a step behind the music. Stop at 617, and there's no magic here really as to whether it's going to absolutely get to 9.18. Maybe not. You look at it and you think it probably will. I would say be careful when it gets there, because that would be a good place for this rally to stall out. Request for AMT, American, and keep in mind, those of you who are still awake here, all of these things that you can trade them all. I mean, you may have come with one particular stock on your mind, but you'll probably be able to discern for yourself which of these forecasts I'm making with the greatest degree of confidence. And I wouldn't hesitate to do some of them if you like them. American Tower Corp. Who knows what they do? I'm not going to take the one-off low right here. Well, let's see what it makes. Well, I am going to take it. When we have an exact hit at that red line, the midpoint resistance, it will tend to confirm the pattern itself. So it's telling me, because it pulled back so sharply from 231.59 exactly, almost exactly, we're on the right trail. We don't have a crystal ball. We don't know whether this thing's going to come down to 140 over the next 3 years, or whether in 2 days it's going to whip around and go through that red resistance line. But if it does, if and when it gets through that line, especially if it punctures it, impales it, spears it, you better believe that it's going to 250.67. IEF. The 7 to 10 year Treasury bond ETF. So this is a portfolio of 30 years that have been held for a long time, still 7 to 10 years of play in them, I guess. And let's see. Well, even though this is not really a one-off high, I'm going to use it anyway instead of the marquee high. I would say this first breakdown below the red line on this bar, it occurred on the 11th of October. I think it's fatal. I do think this thing's going to come down to at least 110.08 before it turns around. And you can back up the truck there with the stop loss as tight as maybe 12 to 15 cents. Well, no, we've got an alternative. I'm going to give you an alternative target. Again, I think it's going to get down there to one or the other, probably not in between though. The second target is 109.94. Request for INSG. Again, you guys can look at that and do it yourself. Just get down there with the bid and a penny any stop loss and do the trade. It'll pay for your time here. If all right, let's see. Yuck. In Seago Corp, I'm going to start here. Well, kind of there. And the way this fist pumped its way through 549, we know where it's going, 611. Be careful up there, because when it gets there, which it will, it's going to be read as a breakout and everybody's going to be bullish as heck. Just remember that you got something there that could turn the rally back, and I would be tempted to do some covered rights if you're a long-term player in this stock. Nug Gold Miners Bull ETF. I think we've looked at enough gold and silver, I guess, but this, I'd say the same thing I did about GOLD, GCQ, all the rest. But all right, let's take a look anyway. We'll get you a fresh set of targets. This is the one I like. Unfortunately, this came down through the P midpoint so hard that I really wouldn't look for that bottom right here at 52.51. I think it's going to come down to, boy, that is a lot. I hate to say, I'm just not that bearish on gold to think such a thing. But it could. I would say if it does get down to 42.58, that again is a back up the truck, hawk grannies, jewels, and all the rest. Just get long down there. If you want to find out ways to get long before it gets down there, or to avoid the risk that you're going to get shut out when it turns from 49 or some such, then definitely take the free trial to Rick's Picks, because you'll be in a trading room there that'll keep you right on top of this thing. Request for Xilinx, and well, we've got big. I like a one-off A. I hate using that marquee high up here to give you a target that worked exactly. I call these targets here. I don't want to bet the farm on them. I refer to them as being good enough for government work, and this one surely was. I guess this is. Well, sometimes government works. All right, so we got a low 14 cents off where we might have looked for a pretty major low. So I think we could get a good rally from here, and we're still on board. Looking at the smaller pattern here, just this first run up off the bottom, you could be looking for 102.73. So that's not a bad shot from here. The key resistance will be at 97.91. So look for a stall there. Be really careful. If it pops through decisively or closes above 97.91 for a couple of days, you'll know it's going to 102.73. VUSXX. This is Vanguard Admiral Fund Treasury MM Fund. What a joke. This is, oh, I see. There's a bigger story here. This thing sucks. What is it? Really? Vanguard something or other. I don't know. I'm going to give up on this before I even start. I think I've done enough gold, so I'm going to skip the futures. I'll take a really quick look at it here. We've had about 7 gold charts and silver, but let's see. I mean that chart of VUSXX. It's like it had no fingerprints. Got them removed with sulfuric acid, hydrochloric acid. What kind of acid did they use back in the 1920s for that operation? All right, so the jury's still out here. I'm not going to give this the death sentence yet. Not death. I mean, the overall pattern is bullish. It's just a question of how much is this little son of a bitch going to correct before we can go back in the water. So we'll need to stay on the smaller charts to make sure that we're not sucking our thumbs, sitting on choking on dust when this thing takes some spectacular leap from right here. We don't want to have that happen. And of course, the best way, as I mentioned earlier, was to just stay on the 15-minute charts. Nothing in a big way is going to happen to gold that's not going to be signaled first on this 15-minute or 5 or the 3. So if you always want to be on top of the trend, you always want to know what's likely or what's not, just stay on these lesser charts. ISRG, Intuitive Surgical. That seemed to be bucking the technological trend there. The surgery is anything but intuitive these days, or I guess it is still. Um, Being the beneficiary of a TORS transorbital robotic surgery myself, I can't much criticize the, the machinery or the doctors who some of whom use it more capably. I'm going to take kind of a weird pattern here, but you get that way when you played with this system for a while. All right, I'm going to have to back up and do that again. All right, so okay, I'd say we're going to see minimum downside here to 530.60. I wouldn't back up the truck simply because if you buy it, that hidden pivot support, you're going to be mixing it up with all the yo-yos, village idiots, uh, and who see that support there, and they're going to be buying too. So we never want to mix it up with the hoi poi and the riffraff. We want to be there all alone, buying hidden pivots that nobody else knows about. All right, PHYS. I appreciate I can see you guys are enjoying this because we have as many people in the room as when this thing began. So I hope you're taking the opportunity to make notes here on stuff you should buy and exactly where, almost always with the tight stop loss. There's no reason why you shouldn't come away from this presentation with information that won't make you $1,000. So let's can I get away from gold here? All right, DE, John Deere. We take the one-off low right here rather than the marquee low to get something we can use. And be careful. We've been close enough to that target already that all right, so we've been to 176.39. So that's 63 cents from the target. Is that close enough? I would say we'll get even closer, and don't be skittish about buying some put options in this little baby if it gets up to 177.02. Let me show you something. I'm going to go. I just want to show you this. We had someone in the chat room today who announced that she was buying puts, call options in Newmont. Now, if we look at Newmont, she was buying the 42 strike, which implies quite a rally from here, but by no means undoable for close to 43. So she's buying a 42 strike for 37 cents. So I want to show you something, and I've been an options trader for 40 years. I've got quite a bit of experience. I was a floor trader, a dealer in options for 12 years. I've written on options for Barron's and all that. But I can tell you that even after 40 years, you never get quite comfortable with these models that you use to predict or to get fair value for different options. You can use Black-Scholes or options research or whatever, and they're pretty sophisticated, but they usually, they can't take into account the one thing that we see on these charts that's manifest and intrinsic, and that is supply and demand. Because whatever fair value is, it can get absolutely overwhelmed by, let's say, some sleazy front run trade by Goldman Sachs or something like that. So instead of worrying about fair value and trying to fix a bid somewhere, all we need to do is draw an ABCD pattern for the underlying, for the option itself, not the underlying. So here she was buying the Newmont 42 strike, expires on December 20th call, for 27 cents and feeling good about it. She's actually making a little money, but this chart says very clearly that this thing will trade down to 22 cents before it can turn around. No guarantee it will, But again, we see that the first time the downtrend encountered this midpoint hidden pivot support, the red line, it just pulverized it. So when that happens, it's telling us it's going to get to the D target. So we're certainly glad we weren't buying this thing up around 240, but I still think we can do better than 35 cents. So here, if you're going to do anything, if you're going to come away from this session with something you want to play with and make a little money with, and I'm not guaranteeing it, but I'm saying this is a pretty good speculation. Just put your bid down there around 24 cents. What do you got to lose? All right, just don't spend any more on this than you would risk on a scratch off lottery ticket. But I would definitely go in there at 22 cents and or thereabouts, and just hang with it. You've got 2 full months to play with this thing, and ordinarily I'd say 2 full months is going to kill you. You know, with options, it's all about time decay, and the last thing in the world you want is an option with 2 months on it, because that's just going to make you. It's going to increase your chance of losing, not the other way around, not winning. So I usually like to buy options only if I think they're going to be in the black within 60 to 90 minutes of when I buy them. So in this case, if we're buying them down at 22 and it turns just like we think it should, it's going to be trade. You'll be in the black pronto. All right, so watch this tomorrow and buy a couple of them, just so that if these things eventually go to $3 or whatever, a buck and a half, you make 6 times your money, and you can say that the hour that you spent in here tonight was it paid for itself. All right, so to come back to your stock there, which was it? It was PHYS, was it? Let's see. No, that was gold and DE. Right, all right. So you could do the same thing. I'm liking this. There's an alternative target. If I slide my A down to here, I can come up with 179.79. So there are two ways to do this trade. And again, I want you to do this. I want you to be able to say that you came to this session and you did a Rick's Picks trade and you made yourself a few $100s. So I know, no guarantees. All right, so there are just two places to buy your puts, 177.02. I am somewhat in love with this pattern, meaning if this thing turns, it's not going to turn from like something outrageous, 177.11, missed by a mile. I think it's going to turn from within 2 pennies of that target. So as far as the stop loss on your puts, you don't need a big one. Deere options are probably sufficiently illiquid that the slippage alone is going to negate the value of a tight stop loss, but I just want to make you aware of it. But if it doesn't get there and it goes just a little bit higher, you can trade more aggressively. You can buy even more puts at 179.79. I like this trade. I really do. So just keep that in mind. Take that with you. Um, uh, I don't want to be all about chalk talk. I want you guys to make real money with real trades. So these are good ones. And usually in the newsletter, in the Rick's Picks Daily, I do try to qualify my confidence level. And when you hear me tell it like this, you better believe I'm confident. So, all right. So what is this? Live cattle. And I'd get ready to do a RABC counterintuitive trade, meaning I'm not going to show you how to do it, but basically if we pop up to here, maybe slightly above that high, instead of thinking bullish long thoughts like everybody else, we get ready to short this little piggy. So I don't trust this thing up here. And I guess I'm not quite sure what the cattle market looks like right now. Otherwise, I'd make some wisecrack about it, but I don't know. I don't know the cattle market at all. Take a look at MU. Another. I don't know. This is a pretty boring pattern. Like no matter what you've done over the last couple of months, you're just not making much money here, unless you short it up there, perhaps. It was a mechanical buy at the. It was actually a pretty good mechanical buy. If you this evening had been held on September 26th, I would say get your bid in there at 444.72 and a stop loss at 40.70. And at this point, we would be up a whopping, we'd be down $24 plus commissions. Great. Well, but consider this, up at that high there, we would have been rolling in dough. That was a night out on the town. Anyway, all right. So the stock was a mechanical buy at the green line. We're shooting for all the marbles here. We're looking for a move to the target. Somehow, this chart doesn't strike me as having the kind of energy that's going to get it to 56.79. But if I did the mechanical trade with the entry at 44.72, I would probably take half off at that red line and be extra careful about managing the risk of the half that you retain. LX Harris Technologies. L3 Harris Technologies. I don't know. Is this Harris that made the laser printers and things like that? Okay. Well, I don't know. I hate this stuff. I mean, I hate looking at charts where you really got to turn yourself upside down just to find something interesting. I have to come down to the 60. I'm going to cheat a little bit just to find something worth looking at here. All right, so now we created some impulse legs. These lows down here are helpful. All right, so the only pattern I can make sense of that I would trust enough to trade is right here. All right, so the little cretin stopped out what I would call a decent short on the opening today. I think it's going lower. I'm going to put a new point C up there, and I think this little piggy's going at least to 195.79, and it could make a higher point C, in which case that would raise my minimum downside target. But 195.79, if it pummels that support, could go all the way down to 189.07. But this stock was definitely being traded by real sleaze masters. These guys make those guys on the Carnival Midway look like Boy Scouts. What a sleazy bunch of operators these are. I mean, this here, just to get enough short covering to run it up the way they did, and they did it in a small way today. But I don't trust this little piece of caca. All right, so I'm giving you downside targets. Don't trust the thing unless it gets above that peak right there at 211.29. I'll teach it. All right. Caterpillar, let's take a look. PD stands for partial data. Sometimes it takes TradeStation a moment to compose itself. You got to hand it to Caterpillar. I mean, they sell real stuff, and here their stock is still moving up. Ordinarily, you need a concept like our friend Adam Newman or Travis, what's his face from Uber. But Caterpillar, they deal in real things like heavy machinery, and I can't believe it that the investment community would reward a company that gets its hands dirty. So this is really, I haven't looked at a Caterpillar chart in a while, but it's a nice, pleasant surprise to see what this thing's doing. It's not exactly screaming global recession either, but all right, let's take a look and see. We're down at bigger pattern. And we got, it looks like an easy romp, a guaranteed romp. Look at the way this thing ripped through the midpoint resistance there. So the stock is definitely going to 135.83. As much as I want to say good things about Caterpillar, buy some puts when it's up there. And let's see. I mean, I'm just sort of curious what the volatility, how much we pay for these puts in Caterpillar. So we don't want to, we'll go out a few weeks. So if we're expecting a turn from exactly 135.83, then why go out a month? You know, those options are going to be making us money in 6 minutes. So we'll go out a couple weeks. If it hits it tomorrow, you don't even have to go beyond Friday. All you want is some option that you buy, a put option for nothing, that doubles in value in 90 minutes. All right, so all right, so all right, so trades with a historical volatility of 27. The implied is twice that, more than twice that. So these options are really juiced up good relative. You're paying twice as much as the historical volatility for them. So, all right, so we can estimate. Let me see here. All right, so we're trading around 136 there. What are the 131 puts selling for if we want to find out about how much we'd pay for them? $2 out of the money with the day's time decay. So if this thing pops to 135.38, the target tomorrow, like midday or later, we're going to pay around $2 for the 135s that are currently trading 370. All right. So they're expensive. I'm a tightwad. I tend to go for options that I can buy for 60 cents or less. And all right. So we're almost done. I did promise you I'd give you a great deal on finding out everything you ever needed to know about the hidden pivot method. So just stick around for a few more minutes and let me finish this up. Cron, C-R-O-N. I'm going to say hold your questions now. Looks like someone asked me about this earlier, and we had a lovely buy there that would have gotten us a decent little rally, a $1 rally in just a day. So we had a nice target to play with. But and I tend to back off when I see nitwit moves like this one, like all the nitwits were in there with their chicken heads cut off, and they do this kind of stuff. Oh, I don't know. What am I supposed to? No, I'm just going to back off this thing because this bar, not that you can't, you just take the bar and you work with it. That's all. You pretend it's valid. Um, all right, so all right. Instead of griping about the bar, let me just do it. And whoever asked about Crone knows whether that spike there is legit, whether it was legitimate idiots doing their little heebie-jeebie dance. All right, so it the downtrend paused exactly where we would have predicted at the midpoint pivot. If and when this hunk of burning love breaks below the midpoint pivot, watch for it to go to 555. That's where I think it's going, notwithstanding whatever lunatic, whatever news stimulated the lunatics a few days ago on that bar. Oh, I see. Caterpillar reports earnings tomorrow. That would explain why the options are trading with a 57 volatility, with 27 being the historical volatility of the stock. That's it for this evening. And again, I hope that I put out enough stuff there for you that you're going to come away in a month from now. You'll send me an email that says, "Hey, I made $1,000 just doing this, and that." These are real things that you can trade. Now, as far as finding out more about the hidden pivot method, you can see I don't do it like the guys that are on television. This is a very different kind of technical analysis, and you can see how easy it is. It's pretty simple. It's all visual. It had to be because, as I said, I was an English major in college, so only maybe half of my brain is even working. So if it works for me, it can work for you. To come to let me show you. I have let's see here. A couple things. If you go to, let me show you, if you go to rickackerman.com/demo, you can see how we use the hidden pivot method specifically to make certain types of entries. You're going to see a little bit more, a couple more of the secrets behind this technical analysis. Some good trading tricks as well. So I would suggest that, again, jot this down, rickackerman.com /demo to see how this system works. And if you're interested, if you like what you've seen so much today that you know that you're going to sign up to take the Hidden Pivot course, I've got a great deal. Not only the course, here's Ed D. Paid the tuition, regretted having waited. I strongly encourage you to take the course. It has been the best investment in trading education I have ever made. Keep in mind that Ed D, at the time he wrote this, the course was offered at $2,500 over 2 days. I've kind of tightened it up a little bit, but also I put more emphasis on the Wednesday tutorial sessions, which will solidify your knowledge. So the idea is that if you come to the 3-hour course, you can do that tonight if you want. You can take the course in recorded form. I'm going to give it live in December, but you can jump the gun. If you sign up, you can take the recorded course tonight and be trading hidden pivot stuff tomorrow, and you can access the Wednesday sessions. But the idea here is that if you take the 3-hour course, the learning process is what I would call heuristic, meaning if you just learn the simple stuff, your ABCs literally, you'll be able to follow the most esoteric trading examples on Wednesday. And again, Wednesday, we're not just screwing around. I'm looking to put out trades that are going to make back the price of the course while we're in these sessions. So anyway, if you learn the basics, you'll be amazed at how you can come to a Wednesday session and we'll be looking at some trading pattern that even I've never seen before, and you'll understand exactly what's going on. You'll be able to duplicate it. So be sure, again, if you want to sign up tonight, you can you're going to be amazed at the progress you can make in just a few days. You can take the full course in recorded form and then start looking at recordings of the Wednesday sessions. And when you find out what the RABC trade is and how it works, I promise you're going to think, why did I wait so long for this? All right, so to get that fabulous deal, this deal was put together so that you'll have everything that you need to learn the basic method, but also to solidify your knowledge and take it way up the learning curve. So Rick Ackerman /web deal, it's a $997 package. You get the hidden pivot course. You get a year's access to the Wednesday tutorial sessions. You get a year's subscription to Rick's Picks. You get access to the recorded library. You get access to, I think it's 7,000 or 8,000 charts now annotated, so that you'll see the best patterns, the patterns that work, things that you can kind of fix in your head. So again, it's not only an amazing deal, but it's a deal that will give you virtually everything you need to really master the hidden pivot method. And just being in the trading room, you'll see that there's so many people who have been through the process and understand it well. You'll have a support system in there. There's no trading room on earth really quite like the Rick's Picks room, because so many people in there adhere to the same system. They're all on the same page literally, and it's not the Tower of Babel that you find in so many other trading rooms, even Elliott wave rooms, where, as you know, you can have two experts diametrically disagreeing about this or that. So so again, $997 buys you everything you need, the complete package to be a Zen master of the hidden pivot system. But if you want to watch a little demonstration on how some of these tactics work, it's rickackerman.com /demo. So I want to thank you all for being so attentive. Just about all of you were here who were present at the beginning, and I hope that that you take enough away from this to make some bucks with it. And if you get into the chat room, you can go to rickackerman.com and just take a 2-week free trial, if nothing else. Be sure to say hello when you get there. So with that, I'm going to bid you all a very pleasant good night, and I hope to see you around.